Today, every day, small cap investors visit Agoracom knowing this is the day to discover the world's next great company, to have their dreams come true. That's why I take to the open road, to find them, to tell their stories, to engage them, to bring them to life, because they want to connect with you from your office, your phone, your home, anywhere. Agoracom, find your dream.
Welcome to CEO Interviews, a production of Agoracom in which we take the time to sit with small cap executives about what's going on at their companies. With us today for the first time ever, I'm excited to have Manash Kestenbaum, the CEO and founder of Enthusiast Gaming. The company is a brand new listed company on the tsx Venture Exchange under the stock symbol EGLX. Now, for those of you who are new to the story, and that is going to be most of you, Enthusiast is the fastest growing online community of video gamers. Now, that sounds like a big statement, but they can back it up. Their online platform consists of over 80 owned and affiliate websites that reach, listen to this, over 75 million monthly visitors. Like all successful online companies, they've also got a very successful offline component. They own and operate Canada's largest gaming expo, which was recently attended by over 30,000 gamers in Toronto. They also have the financials to back it up. They put up the Q3 the financial report. Revenues for the quarter were $2.8 million, the highest ever, versus just under $700,000 last year. And year-to-date revenues for the first three quarters, $7.4 million. That's a 625% increase over the same period last year. The company is cash flow positive. It's profitable. And here to talk about it is Manash. Welcome to the show.
Hey, George, I'm really happy to be here. It's very exciting.
We're happy to have you, especially when you're in the esports and gaming space, because we love that space, and especially when you're putting out this kind of financial results and numbers. So let's get to it on that. First thing I want to ask you before I get to the specifics about your company, the gaming industry. A lot of people our age, a lot of people in the finance world don't realize that the gaming industry is a $180 billion industry. It's bigger than Hollywood, bigger than the music industry, and yet they can't wrap their minds around it. So how do you explain the explosion in video gaming in esports?
So the way I look at it is video games have been a massive industry already for multiple decades. We had Atari being huge in the 70s. We had Nintendo being huge in the 80s, PlayStation, Sony, and then Xbox becoming huge in the 90s and on. So this is not a new phenomena that there is an enormous industry here. What I think is taking people by surprise and what has led to an entirely new level of penetration is really two things. Number one is that the internet, when you combine that with gaming, it's not just people sitting at their living rooms anymore and playing, just with their family, which is the way it used to be. Now the internet has created almost like a religious level community in terms of the passion and the hardcore, die-hard fan, in that they now feel like they're part of something. They're either part of a social movement of people discussing video games, streaming their video games, playing it online, and then other people are watching them play, or even competing against each other with very little lag in between, creating something that's really competitive and rivaling with traditional sports. So I really look at it as the growth of the hardware, the technology, and the internet, and the connection that has really taken this community of gamers that have been around for a long time and just exploded it beyond to a whole new level of entertainment that's, of course, as you mentioned, surpassed movies and television and the music industry. So that's I think, the main driver of all of this.
Fair to say that as internet speeds get faster and hardware gets faster, that it's fair to say that this industry is only going to grow more and more as people compete with each other online. They watch each other online. They stream their stuff online.
That's exactly it. So the faster the technology has become, the stronger it's become, the more kind of options that you have available. Even a game like Fortnite could not have been done 10 years ago because Fortnite has 100 people playing seamlessly all at the same time. 10 years ago, it would have been stuttery if you would have had 100 people competing at that competitive level. So, it's really the technology and the innovation that has brought it to this level.
Well, you're reporting some staggering numbers in terms of traffic. Let's talk about your online model. How does that revenue model work with your ad network, and how you're generally generating revenue from your online side?
Of course, the way that we look at ourselves, we believe that we are the fastest growing online community for the social gamer, the gamer who wants to be connected with others, who wants to communicate with others, create content, read content. And that's what our 80 sites are all about. They each have their own specific, passionate, hardcore niche community, whether it's single player games, multiplayer games, esports games. And that drives obviously a lot of eyeballs. People want to come and talk with others and consume content or create content. On every page that you come on in our website, it's free. You don't have to pay a subscription, but there are ads, relevant ads. So for example, this holiday season, think about how many video game companies are publishing big budget games. Now they want to advertise those games, so they come to us, and that's where we have about 12 billion ad requests a month. It's actually much higher now. And every ad is filled, every ad is paid for. It's just getting larger.
Let's talk about your offline model before we go into your financial results. Like a lot of successful companies, Apple it was a digital company that their Apple stores, and Microsoft has Microsoft stores. So you don't have stores yet, but you've got this fantastic expo that you do once a year. Correct me if I'm wrong. It was at the Metro Toronto Convention Center. 30,000 people showed up to that. How did you build that big, and where's it going? Is this the peak for the expo side, the offline, or do you plan on growing that as well?
Well, both the online and the offline parts of the company grew in a very grassroots, organic way. The online portion was my blog, my personal blog. The offline portion was just a gaming event that I ran at the Madison Avenue pub in Toronto for about 120 gamers. Both of those pieces grew year over year and incredibly fast, as I realized, wow, this whole concept of gamers wanting to have a community is massive, has massive potential. It's something that gamers are really interested in. So the online piece, we grew from my one blog to 5 sites, to 30 sites, to 80 sites, and now it's continually growing. And the offline piece as well, we grew from, in 2014, we were putting on these pub events, between 100 and 400 users, attendees coming to the events. A year after, in 2015, May, we put on our first mini tournament at a convention space with 30,000 square feet. We had 1,700 gamers show up because we had taken it to a new level. A year after that, we had the Toronto Star supporting as a primary partner on the event for that year. And with their marketing and their budget, we were able to grow it to 12,000 people a year later. After that, we didn't need the Toronto Star anymore to help us. We had grown our own online business large enough that we could fund it ourselves. We could market ourselves even larger. And our next event got 24,000 people. And now we've just moved downtown to the convention center, where we got over 30,000 people. We maxed out capacity at the hall. Security had to shut the doors. And next year we're going to be, taking more hall space. And we're also looking at potentially moving it to other cities as well. We're on our online side, we're not just a Canadian.
Right.
The company is based in Toronto, but the traffic is largely North American, and of course the majority is from the US. So in ComScore, they say that we are number 5 in our overall page views in gaming in the US. We have Twitch, Curse, GameSpot, and Wikipedia above us, but then we're number 5, and we're growing really rapidly. But that's in the US. So we're looking right now at where can we expand to in other cities, and how do we, I love the concept of taking an online community and giving a physical manifestation where everyone could really meet in person.
Sure.
You don't need to do it every single day. It doesn't have to be perpetual like the online piece is, because in the online piece, people are, in the middle of the day, they have their phones with them. They could, quickly socialize with some others. When they get home, they could go to their PC and log on with their desktop computer. With the offline portion, you just need a few touch points a year, which really satisfy your ability to meet the rest of the community who you've been socializing with. You get a chance to actually meet them in person. and that's really exciting for gamers. So, we want to provide both the online and the offline support.
Yeah, and I got to give you credit for everyone watching at home. What I really love about your business, Minaj, is what you said, organic. You grew this from a blog and some small pub meetups with 120 people, as opposed to a VC funded company. They got $50 million. You bought your way in, because the risk, not that there's anything wrong with that, but the risk with that is that can all collapse as well, because you don't have that real love, that real community. But in this case, it's been organic growth and bringing people together. So that gives me the confidence that your business is very, very on very, very solid footing.
Yeah, 100%. It's because of the landscape. We decided that we weren't going to go the VC route. We wanted to be a local Canadian company, initially supported purely by the Canadian investors, angels like the York Angels and the Spark Angels, and eventually institutional and going public. But that meant that we had to actually build a healthy business right away, which meant for us to become revenue positive in 2015 and 2016, to become profitable and increase our margins in 2017. And now that we've reached that kind of point where I almost consider like the engine is a well-oiled engine that, we don't need tons of money to operate the company. Now we could use the new money that we raise to take the company to a new phase, which is the roll-up phase, the acquisition model, where when we acquire profitable websites, we're able to use every dollar towards that. So we are constantly growing the expense base in a healthy way, in accordance with where our profitability lies. So, we kind of have this thing where as we reach more revenues, higher revenues, more profit, we take more venture, more risk, and acceleration of the growth. And it keeps on going like that, and we keep on making those tweaks. So it's a very sound, safe kind of way that we run the business. But at the same time, in terms of growth, you see from 2016 to 2017, we had that 10x growth year over year. So we have both components where it's actually a healthy business that produces real large revenue. And at the same time, we're also growing really rapidly.
Well, and that's the advantage, again, of being a grassroots founder. You're not out, you didn't bring in $50 million from funders and you're just throwing money, because that's what happens a lot of times, those companies. I don't think you've let go of that grassroots mentality where you're always watching your money and being responsible. So I think that's another great component. Let's go into your financial numbers. You put out some pretty unbelievable numbers. 600. Let me talk about the year-to-date number. 625% increase. What do you account for that? How much of that is organic growth? How much of that is acquisitions and growing that way? And can we look for that same kind of, not the number, but that same kind of model going forward, where you just you're hell bent on growth right now?
90% of those numbers are organic. Only about $1 million in there for this year will be from the acquisitions, and that's because we initially hadn't raised the money towards the same level of acquisitions we're about to do. The acquisitions we've done to date were in the $500,000 range up to $1 million, and we did 2 larger ones, and the rest were kind of smaller, strategic. Only now that we've raised money, we're cashed up from the previous 2 raises, sitting in the bank and looking to execute these acquisitions. That's where things will shift. But until now, it's all been organic, and it's been through the optimization of websites, of learning how to monetize better. Every week, every day, actually, our team is finding new little nuances to tweak, little subtle things that, as a whole, when you look over the year with hundreds of little tweaks, optimizes our revenue and the ad technology. In addition, we had additional sites hearing about the network that we're creating and coming, knocking on our door, looking to join the network. Each time that happened, we would get a bump in revenue as well. So it's been organic to date, and we're going to continue that organic growth. But we're going to pile on top of that a whole new layer of acquisitions. So it's going to be exciting to see what we could do when we combine both aspects.
It's safe to say, because you're a public company now, you can use your stock as currency to go out and acquire companies. Because at the end of the day, you've done it. You've gone through the process of being listed, becoming a public company, and therefore you've got smaller sites or other sites potentially that don't want to go through all that. They just want to be acquired and keep running their business, because as opposed to trying to go through the public markets and the capital markets process.
100%. It definitely gives us flexibility in negotiations. Everything is a negotiation. So some sites want more cash, some take majority stock. We generally try and keep them escrowed for a decent period of time so that everyone's all in it together. If they're taking shares, it's because we want them to be taking because they believe in the company and they feel that they could add something back. So for example, when we acquired Destructoid, the founder of Destructoid, Nero, has joined us, become our director of content, brings a wealth of knowledge of a decade of building up his brand, building up the community and the processes. He's a generational talent. That's what we're kind of looking for. And by giving them stock in the company, they become partners with us, which just helps us all along.
Yeah, in a lot of ways, you open up, you just unleash their creativity because they no longer have to worry about the finance side of their business. They're acquired, they've got shares in the company, they're part of Enthusiast, and they can just focus on what they do well. So that's a fantastic model.
100%.
Let me go devil's advocate.
Yeah.
Now, any big industry, especially one growing as fast as gaming and esports, is competitive and probably going to get more competitive. So, hopefully you're like a lot of really good founders where you're constantly looking over your shoulder, thinking about who's coming up behind you, which keeps you running fast. And I'm sure you are, because this is where you got to. What are your competitive advantages that have gotten you to this point? And can you maintain those competitive advantages going forward? Because you're always worried about the next Menage, in their garage, in their basement somewhere, creating a network. So what are your competitive advantages that brought you to this point?
Great question. I think there are several things that give us competitive advantage. The first thing I think is that, really simply put, we're early adopters. We've been doing this for many years. I was involved in the gaming industry since I was 13, writing for IGN. When I was 28, I created my blog, Nintendo Enthusiast, and now I'm 34. So we've been in this and growing our audience and growing the business to the point that now we already reach 75 million visitors a month. We already have the 80 sites. That gives us a very healthy, head start on things. If another company would come along and say, "Hey, let's copy Enthusiast Gaming's idea," well, you have to get to 80 sites really quickly. To 75 million, it's not simple to do that. No. It'll take you some time, and while you're doing that, we'll be continuing to grow and getting to an even higher number. So, I think we've built ourselves a very nice head start. So that's the first thing. The second thing is we're revenue generating already. A lot of companies coming into the esports space, into the gaming space, they're spending a lot of money. They've raised a lot of money, but they haven't figured out how they're going to make a lot of revenue. For us, we're already heavily revenue generating. When we raise money, we don't have to raise towards operational costs. I'm sure in the future, as we take large strides and take things to new leagues, we're gonna have to spend more on operational as well. But for now, we're a revenue generating company who's reached a normalized profitability. So that kind of gives us a certain sophistication and maturity, which a lot of startups are just jumping in right now. They have to climb that ladder as well in terms of figuring out the business model that actually keeps them afloat, keeps them growing. Third thing I would say is we're agnostic. There's a lot of companies right now joining the esports world and spending a lot on a specific team or specific game that could disappear. I've been measuring kind of the life cycles of games over the past decade or two in gaming. And what I've seen right now is that gaming is heavily driven by innovation. If you have a popular game and it reaches a certain peak in popularity, within 2 quarters, about 6 months or so, it starts to wane in its initial peak and people move on to the other things. They very often keep a healthy user base that continues to support it and build a community. but they've lost a large part of the mass mainstream that we're just, doing it day and night. So we've seen it with Minecraft, we've seen it with Pokemon Go, we've seen it with
seen it with Fortnite. I've seen it with Fortnite. Even my kids who are doing battles on weekends with their friends, that's kind of waned because there is a burnout point at some point.
There's a burnout. The concept of Fortnite was really exciting. It's 100 people getting to play together. The people now are getting used to that. Everyone's trying to copy it. Everyone's trying to do the battle royale mode, and people are even getting bored of the battle royale now. They want something new, disruptive, innovative. So if you're buying a $20 million esports team, you never know if that's going to last a long time. You may have to pivot to something else. For us on our sites, we're agnostic. We will never buy a site that's tied to one specific game and relies on one game, because that game could be gone in 6 months from now. We don't want that kind of risk. We're agnostic to it.
Very smart.
We'll focus on consoles, devices, and genres. Those things are broad enough that we think that it diversifies the risk. The last thing I would say, the fourth, is that we speak the language. We've seen a lot of big corporations come in and say, hey, we're now all about esports. We're all about gaming now, our brands. And they throw a big event and no one shows up. And they spend a lot of money in production, a lot of money on the hype. No one shows up to it. Gamers could smell the BS a mile away. That's what I always say. I grew up a hardcore gamer. In our office, we have executives, very smart business people, but we also have a lot of gamers who really are part of the community and live it, are excited by it, and speak the language. And I think that the authenticity, number one, it's a value in the company. We always talk about we must speak authentically. We don't want anything going out that sounds like corporate. We don't want anything that sounds like you're trying too hard to be like a gamer, but you're not a gamer. You have to speak the language. It's a counter.
You can't buy your way, and you can't buy your way, and that's a great competitive advantage, because you can't have somebody just throw down $100 million and try and become the next Enthusiast Gaming, because the language, the culture, the love, the connection is in there. And if there's one thing I know about esports guys, is that, for the esports audience, they don't want to sell it to corporations. They want their community. They're real. They want to be real, and you got that.
Yeah, exactly.
All right. Well, Manoj, I got to tell you, you've done some unbelievable things, and I'm a huge fan. Anyone who follows me on Twitter and on LinkedIn knows that I'm a big fan of esports. I think this is just the beginning of what we're going to see as the world gets bigger, as internet access gets better for the whole world, as kids get older, right? It seems like every time a kid turns 12 or 13 or 14 years old, they're going to be in the esports world. It's just in the gaming space, and you're sitting at the top of that. So congratulations on what you've accomplished. Congratulations on your listing on the TSX venture. And we're looking forward to having you back quite a bit in 2019, because it seems like you're going to be on a growth path that we want to follow.
Thank you very much. It was great speaking to you.
You've been watching Manoj Kestenbaum. He's CEO and founder of Enthusiast Gaming. The company trades on the TSX Venture Exchange under the stock symbol EGLX. Go do your own due diligence. You've seen the great numbers. You've heard what Manoj's vision is and where they're going, what the competitive advantages are. So it's all up to you now to go do your due diligence. But thanks for joining us today. Hope you enjoyed it. I'm sure you did, because I did. Have a great day. Talk to you soon.